Hi, today we will be talking about the basic accounting assumptions. So, the basic accounting assumptions are the very foundation of the generally accepted accounting principles. So, without these basic accounting assumptions, there could be no uniformity in the accounting practice, and therefore, the financial statements prepared could be pointless and could result to wrong and devastating decisions. So there are 5 basic accounting assumptions. These are the accounting entity, going concern, time period, unit of measure, and accrual basis assumptions. So we're now going to discuss them one by one, starting off with the accounting entity assumption. In the accounting entity assumption, the business entity is considered separate and distinct from the owner or the management. So, for example, if Mr. X invested 50,000 cash and delivery car worth 750,000 pesos to his newly established business named X Grooves. So under the accounting entity assumption, the 50,000 cash and the delivery car worth 750,000 pesos is now owned by X Grooves. Therefore, Mr. X could no longer use the cash and the delivery car for his personal interest since it is now owned by the business. It is now owned by X Grooves. So there must be a clear distinction between personal affairs and business transactions, because only business transactions could be recorded in the books of the business. Now, the second assumption is going concern. So this means that the financial statements are normally and regularly prepared with the assumption that the business has a continuous life of existence. The third assumption is time period assumption. So as I mentioned earlier, under the going concern assumption, the business is assumed to be operating continually for an indefinite period of time. So the life of the business is indefinite. And since it is indefinite, it would not be practical to wait for the very end of the life of the business just to know if what happened with the investment made by the owner. So under the time period assumption, the life of the business is divided into equal periods, wherein at the end of each period, the financial statements are being prepared. So, meaning to say, at the end of every period, the business owner could now determine if what happened with his investment. So, the accounting periods could be a period of 1 month, 3 months, 6 months, or 12 months. So if financial statements are prepared every month, we call it on a monthly basis. If financial statements are prepared at the end of every 3 months, we call it a quarterly basis or on a quarterly basis. If financial statements are prepared at the end of every 6 months, we call it on a semi-annual basis or semestral basis. And if financial statements are prepared at the end of every 12 months, we call it on a yearly or annual basis. So the selection of the right accounting period depends on the necessity of the business owner or the management. So if they wanted to know what happened to the business or what happened with their investment every month, so the financial statements must be prepared on a monthly basis. So if they wanted to know what happened with their investment every 3 months, so financial statements must be prepared on a quarterly basis, and so on. But usually, business entities adopts an accounting period of 1 year, wherein the preparation of financial statements is prepared on a yearly or on an annual basis. The annual accounting period could either be calendar year, fiscal year, or natural business year. The calendar year period starts, or in the calendar year period, accounting period begins on January 1 and it will end on December 31 of the same year. So this is the most common used accounting period. That is because it is the nearest when filing for the income tax return, since the business records are closed on December 31 and then the deadline of the filing of the income tax returns is on April 15 on the next year. And then another accounting period is the fiscal year. So the accounting period here begin on the first day of any month of the year except January, and it will end on the last day of the 12th month. So for example, if the period begins on July 1, 2021, so it will end on June 30, 2022, thus completing the 12 months. So another accounting period is the natural business year. So this is still a 12-month accounting period that ends on any month when the business is at the lowest or experiencing slack season. So going back in our basic accounting assumption, so we are now in the unit of measure assumption. So here, the unit of measure is assumed, here in the unit of measure, it is assumed that the purchasing power of peso is steady or stable regardless of the inflation rates. So here, the pesos are being accounted for, and then the changes in purchasing power is ignored. So we're now in the last accounting assumption. We have accrual basis assumption. So here in accrual basis assumption, income is recognized when earned regardless of when it is received, and then expense is recognized when incurred regardless of when paid. So for example, X sold 5,000 of his merchandise inventory to Y on August 1, 2021, and then payment will be made on September 30, 2021. So here in this example, revenue is recognized or recorded on August 1, 2021 because this is the date when revenue is actually earned. So take note again, income is considered earned at the point of sale. So in this case, in this example, the point of sale is on August 1, 2021, and therefore the revenue or the income is recognized in August 1, 2021. Another example we have here. The payroll computation of XYZ company showed that the salary of all employees for the payroll period August 16 to 31, 2021 amounted to 75,000 pesos. The said amount is to be paid to employees on September 5, 2021. So question, when are we going to record the salary expense? Is it August 31, 2021 or September 5, 2021? Of course, that should be on August 31, 2021 because this is when salary is actually incurred. So we're done with the accounting assumptions. I hope you learned something. So thanks for watching.